Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position along with your favorite beverage to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Ryan S., Todd A., Brian H., and Paul M. We've got a returning guest on the program today, along with a new company being introduced. Mr. Dan O'Flaherty is with us. Dan is the Chief Executive Officer of Versamet Royalties, a newly listed royalty and stream business that is focused on precious metals as well as selective base and energy metals. Versamet already has a collection of paying royalties and streams from production, along with a portfolio of development stage and advanced exploration stage royalties geared towards significant growth of the business in the coming years. Versamet Royalties is listed on the Toronto Venture Exchange under the symbol VMET. Mr. O'Flaherty, it's great to have you back on the program.
Thank you. I appreciate you having me on.
Well, Dan, it's been a while since you've been on the program, and I can't believe it going back to October 2019 is what we have here. Since, of course, we have a different and larger audience. Why don't we kick it off here by having you touch on your resume and experience in the natural resource industry?
Certainly. I spent 10 years in investment banking, exclusively focused on the mining sector, predominantly doing M&A, and actually a lot of that work was on the royalty and streaming sector, which kind of led to my ultimately co-founding Mavericks in 2016, which was a royalty company initially spun out of Pan American Silver. We built that over the following 6 years, which is what I've been on the show in 2019. Ultimately, Mavericks sold to Triple Flag in 2022 for a total consideration of US $750 million. I've since joined Versamet, which is launched as a new precious metal royalty company, and we just went public on the Toronto Stock Exchange Venture in May of this year, so we're just getting going, but we've got a really great portfolio that I'm keen to talk about here.
Certainly, we remember you quite well. And of course, Mavericks Metals was part of the SmithWeekly research portfolio back then. And of course, we had good success with Mavericks, and it was a great success at the end as well. So appreciate that, Dan. And, I think the past experience and success at Mavericks Metals, Dan, for yourself and for the team, I think it's very pertinent to Versamet now and what you're doing there. When you look back at that and you guys look at kind of lessons learned and some of the great things that happened, and then maybe a few things that didn't work out so well as you guys progressed that company, talk about those experiences and then what you would do this time around differently with Versamet.
I think there are a lot of parallels to the Mavericks story and the Versamet story. When Mavericks came around in 2016, it was spun out of Pan American Silver. Shortly thereafter, we added Goldfields and Newmont as large shareholders through portfolio acquisitions for shares. So we had three core shareholders that were all corporates. The parallel to Versamet was initially set out of Sandstorm and Equinox Gold. We've since done a transaction with B2 to have B2 come onto our registry as a large shareholder, and Royal Gold is in the process of acquiring Sandstorm to take over their 24% shareholding. So there are some parallels in both the initial shareholder base and having some large corporates that intend to be long-term shareholders that are supportive of the strategy. They're a source of future deal flows, and they endorse management. We really appreciate their support. Specifically, there's further parallels in the royalty landscape, which I think we'll get into at some point. But when Mavericks came out, there was I'll say it was to not a lot of fanfare. People were wondering what we needed another royalty company for. It's already a busy space, and it really all focuses on size. At that time, there were a lot of transactions that moved the needle for junior royalty companies that didn't necessarily move the needle for the larger players, and we were able to be very active in that. I'll call it at that time was a $25 to $50 million space. Very busy, and kind of the upper end of the mid tiers at that time was Sandstorm, Cisco, now Awara, and Triple Flag, who were in that 2 to 3 billion range, and that's where there's a lot of opportunity to grow. Paralleling that to where Versamet is now, the larger juniors or smaller intermediates, precious metal royalty companies, have largely been hauled out. You've seen obviously Mavericks get acquired, Nomad was acquired, and now Sandstorm is in the process of being acquired by Royal Gold. So when we look at after the junior precious metals royalty companies, there are no royalty companies between a US $600 million market cap and $5 billion market cap. And that's really the missing middle where I think Versamet is incredibly well positioned to fill that void as the next large junior / smaller intermediate precious metals royalty company. So we're really excited with the path that lays ahead of us, where we can critically differentiate ourselves with our ability to grow and fill that missing middle.
Yeah, that's good stuff there, Dan. I appreciate you walking through that and some of where Versamet gets placed here, and the differences in the market back then versus now. Not a lot of companies out there. When you go through and you add up all the royalty companies that are in the sector here, precious metals, even base metals, et cetera, there's not a lot out there. And then when you look at market caps, you guys are in an interesting place too, where you're certainly not a junior by any stretch, in my opinion, but definitely you're not a major either. And so you're kind of that lower mid-tier area, and there's not a lot of folks in that area, and you have that, of course, gap to grow as well. So it's an interesting position you guys are in already.
Just going to actually follow up on the last question you asked, because I think the exact way to fill that void and to kind of get that escape velocity from the junior to the kind of large junior, smaller intermediate is by focusing on cash flow. And that's one thing I think we're doing a little bit differently at Versamet than we did at Maverick. At Maverick, we built out kind of the back end of the portfolio with some long dated options first before adding cash flow. With the initial Versamet portfolio that spun out of Equinox and Sandstorm, we already have that long dated optionality. So we're very much focused on cash flow, which is, I think, one way that we can really grow the vehicle into that attractive re-rated size range.
And with that, of course, you guys are going to attract a different demographic of investors here. Knowing that you already have cash flow, that's useful. It's less dilutive, all those benefits that come with that. And of course, your guys' ability to be able to get those cash flowing deals, also a key point here as well. Before we get into Versamet, I want to do just a little bit of an educational segment here. Talk about the precious and base metal royalty stream industry in general, and also just explain the various royalty and stream structures that are currently prevailing in the marketplace.
Talk a little bit about the history first. I was lucky enough to be involved in a lot of the initial deals that Silver Wheaton, when they were called Silver Wheaton, obviously Wheaton Precious now, in the advisory space when I was working in investment banking from 2003 to 2012. Now, the royalty model has been a little bit mature, with the most notable Franco-Nevada acquisition of the Gold Strike royalty in the 80s. But when Wheaton Precious came onto the scene, it really kind of differentiated how royalties and streams were put into the capital structure of mining companies, which is a very, very common part of the capital structure now. But so Wheaton, I'll call it Silver Wheaton because it was named Silver Wheaton at the time, again, renamed to Wheaton Precious. They kind of came out in 2004 with a transaction on their own San Dimas mine of Wheaton River. So it was kind of a self-contained deal that really kind of opened up the industry to industry. It's interesting transactions. We as on the banking side advised a couple of the counterparties on some of their early deals, starting with Lundin Mining on Zinkgruvan and Glencore on Yaliaki. And if you look at kind of how the streaming sector has evolved, at that time, it was very much an arbitrage between where silver companies were trading on a price to net asset value relative to base metal companies. They were essentially trading at 2.5 to 3 times NAV on the silver side, but below 1 times NAV on the base metal side. So there's a very significant arbitrage of taking byproduct silver and putting it into a silver royalty focus. And that really, from 2004 to 2008, I'll call it, was the initial silver streaming kind of model, where it was based on the silver arbitrage. Then we had the kind of the financial crisis in 2008, and a lot of the transactions were on debt restructuring, whereas Wheaton had established itself with a significant access to capital, and they were able to help, and not just Wheaton, but also Franco and Royal Gold as well, being able to help companies recapitalize on very overburdened debt balance sheets. And a lot of those companies had hedge book problems as well, because you saw the really strong run up in commodity prices from 2004 to 2008. And I'll call it the next phase over the next few years was on enabling M&A. This was allowing acquirers who wanted to be acquisitive to put royalties or streams on assets that they were about to acquire. So they weren't necessarily selling royalties on their own assets, but on something that would facilitate an M&A transaction. And then finally, over the past, I guess, from 2012 on, it really transitioned to gold, whereas historically it had been mostly silver. This was really the gold, and that expanded the size range of transactions. And now we're seeing it as a very common financing tool because we've seen project financings slow down from the debt side. Equity markets have become a little bit more selective than they were earlier on in kind of the gold super cycle, so to speak. But having the gold industry embrace the royalty and streaming structure has really opened up a whole new, much larger industry for the royalty and streaming companies. If you just look at the market cap alone of where Wheaton Precious and Franco-Nevada and Royal Gold have gone over the past 20 years, I don't know what the exact percentage is. I'd imagine it's probably 20x. And that's not to mention all the other companies that have kind of joined the industry, so to speak, now being Triple Flag and OR, and then ourselves and another group of smaller juniors, that really are able to provide capital across the size range up to the mining sector.
Appreciate that background just on the industry and how it's kind of merged and evolved, I suppose, over the years. And certainly, yeah, some of those returns on the Francos and the Wheaton Precious Metals and the Royal Golds been a fantastic way to have exposure to the industry. Great returns on those stocks as well. And Royal Gold coming in here for Sandstorm certainly signifies that those three majors are going to be coming in more frequently now, given what we've seen here, and Royal Gold making the move on Sandstorm is certainly positive for all of the folks in the business. Of course, the needle movers, which Versamet certainly already is, and going to be more so in the future here as you guys develop out your strategy, I think is obviously one of the first and foremost targets. That's pretty obvious. There's not a lot out there, so it's pretty simple to look at. I guess with that, why don't we jump right into the background of Versamet here? Just talk maybe quick overview of Versamet. We'll get into more details, but then the background. Once you got done with Mavericks, this showed up pretty quickly thereafter, and you guys started working again.
No, that's exactly right. Well, we did just list on the TSX Venture Exchange in May of 2025. In the background, we have been building a very solid portfolio over the past 3 years, including completing just under 300 million of royalty and stream acquisitions since inception in 2022. And that's really been kind of the backbone of the portfolio. We wanted to get that attractive critical mass, the free cash flow flowing before launching into the public vehicle, which we did in May. We've got support from great shareholders, B2, our largest shareholder, Sandstorm about to become Royal Gold, and then Equinox as well. All strategic shareholders, all have been great to be on the registry. But as I mentioned, the focus on building the vehicle has been on precious metals cash flow. So the assets that we've been predominantly acquiring, are in the gold sector on meaningful assets highlighted by Greenstone in Canada, Kiaka. We have a smaller royalty on Blackwater, also in Canada, and we acquired a copper stream on the Colton mine that Endeavour Silver acquired earlier this year. So each of those has really given us a strong profile of gold equivalent ounce production growth. Very specifically, we did 5,100 gold equivalent ounces to Versamet's account in 2024 over 2 paying assets. That's going to grow to 2025 of 8,000 to 9,500 GEOs, so just under 10,000 gold equivalent ounces over 5 paying assets. That's growing next year in 2026 all the way to 14 to 16,000 gold equivalent ounces over 6 paying assets. So that's a 3 times increase just from 2024 to 2025 to 2026. Long-term 5-year plan, we do see approximately 20,000 gold equivalent ounces. So that's really been the focus of the company, has been building the underlying portfolio. Since launching in May, we're now in parallel on building the capital markets profile. Starting off as a TSX Venture listed company, there's a long path for growth, which includes getting more analyst coverage, getting more liquidity, ultimately with the TSX listing in the future, and then most definitely a focus on listing on the New York Stock Exchange American. All of that comes with increased access to investors, increased liquidity, lower cost of capital, more of a capital markets brand. And I think that's going to be one of the keys to drive the re-rating in the portfolio. And while we can't speak to exactly B2 and Sandstorm, now Royal and Equinox, I think that's one of the appeals of taking equity in the first place, is being able to have exposure to this growing vehicle where there's still very significant percentage growth achievable.
I think with that, you guys already have some strong partners Then you have, of course, the partner pool within the network, the past partners at Mavericks. So you guys have a lot of stuff to work on here, Dan, as well. So I'm excited to see what you guys do next. And any of these partners, while some of these companies, you could say in this gold environment, they may not need the cash at this point, and they definitely don't need to sell equity. But at the same time, to get upside in a company like Versamet, I could see why there could be deals done. So I think that also is a key point to bring up there as well. So I appreciate that. And then also some of the awareness plans, you just touched on some of those things. Maybe we just talk a little bit more about that. So the goal would be to look at TSXV upgrade to TSX big board, and then looking at maybe a US listing, possibly just skipping over OTC, getting right onto the Amex exchange, NYSE. And then from there, analyst coverage comes with the indexes. Just talk a little bit about your thinking on that process and what the time frame would be there.
No, it's a great question. It actually goes back to one of your early questions as to what we would do a little bit differently than Mavericks. It would be focusing on that capital markets profile. It took Mavericks, I think approximately 3 or 4 years before it got listed on NYSE American. When we did, it was received incredibly well, and that's where ultimately more of the volume was traded. So it's going to be a much earlier focus for Versamet. Just launching that process now. So I would say this would be something that we would intend to be doing in the next 6 to 9 months. Obviously, it would need board approval, so this is something that management would be recommending. But I think listing on the NYSE American in conjunction with upgrading to the TSX is probably something we would evaluate doing together. Timing wise, that would be the convenient way to go about it. One question we get asked is, does that mean a dividend's coming in the future? We're very careful to answer that question because we see such an opportunity to deploy capital in growing the portfolio and adding more cash flowing royalties and streams. With that being said, it is something that is very commonly looked at when you list on the U.S. exchanges. It is something very particularly attractive to the U.S.-based retail investors. So one aspect that we really like a lot is how Franco-Nevada has had, I'm not sure exactly what the number is, but I think it's 15 to 20 years of consecutively increasing dividends. So once we put our dividend in place, we would start probably modestly so that we could continue to increase it over time and demonstrate our commitment to returning capital to investors despite still wanting to deploy capital into growth. And I think that's the benefit of focusing on cash flow, so you've got the ability to do both.
Yes, I was going to talk about that. It's a good subject to bring up. And I think some of the audience, there's going to be a certain demographic you're going to attract. And I think over the years of evaluating this, whether you're talking about an operating mining company producing gold or a royalty company, I think overall to capture that demographic of investor who is looking for some type of income plus the growth, I think is very important, Dan. And I think you guys understand that as well, knowing that, yes, I'm going to use rough numbers here, knowing that 90% of our capital needs to go into new deals and continue to grow the company, but at the same time establishing that base low level dividend to starts to capture that group, and then as you guys are able, increase that as you guys grow. I think that's an absolute key way to do it. And to not offer a dividend at all, I do think is a disservice to capturing some of that demographic. And if you guys are going to come into the US, obviously, I think that's a key part to have involved there. So I think you and I are seeing exactly this, the proper way here as to how to approach that and do that balancing act, because obviously the growth is the key thing, and you guys got to throw a lot of capital at that side.
I'll just make some very specific comments. For next year, we're growing to 14 to 16,000 ounces at, it's approximately 15,000 ounces at today's gold price. That's north of $50 million in revenue. So that'll be north of, call it 40 million in EBITDA. I'm using rough approximate forward-looking numbers here, but that is enough of a margin, and this is a long-term 90% margin business where you can do both, which is deploy cash flow into new transactions as well as also returning capital to shareholders. So I just do think the margins in the long-term 90% margins in the royalty and streaming itself actually lend itself well to being able to parallel build the portfolio, provide that dividend exposure to shareholders.
It's a great thing to set up, and I'm glad you guys have focused it this way to where that gets out earlier with the cash flow coming in here. So that's good. Walk us through the current cash flowing royalties. I know you already touched on some of them, but just maybe a little bit more detail on the key ones here. Kick it off perhaps with probably the most important one. Potentially, you might argue with me on that, but the Greenstone Mine, Ontario, Canada. Talk about that first.
The Greenstone stream, is one of the cornerstone assets in the portfolio. And actually, just going back to talking about, some of the benefits of our shareholder base, is this was not the first transaction we did with Equinox. So they are a follow-up source of transactions, already being a shareholder as part of the spinout. We did this deal late 2023. It was a $52.5 million cash acquisition from Equinox to the Versamet account. I think Equinox has been doing a good job at ramping it up. It still has some ramp up to go, and I think their recent merger with Calibre is really going to unlock the upside in that stream. This is a stream that does have some structure around it, so it is subject to a minimum of 4,200 GEOs per year. So that's really protected the company, Versamet, on the slower than expected ramp up there at Greenstone. So we are receiving that minimum now as they continue to ramp up to nameplate capacity, which we see happening over the next 12 months here. But a long-term exposure to a large Canadian mine, key part of our portfolio. Kiaka is another significant cash flow producer operated by West African Resources. They poured first gold ahead of schedule and below budget in June of this year, so it's really just starting in early days on its wrap up, but that's going to be a big contributor to our increased production over the back half of 2025 and over all of 2026. They've been a tremendous operating partner to deal with. We are in regular dialogue with them. One of the third legs of the stool is the Kolpa mine. This has been a mine that's been operating for 25 years plus in private hands. We acquired our copper stream in conjunction or in parallel with Endeavour Silver acquiring the asset itself. We see significant upside here from going to a private Peruvian operator into Endeavour Silver's hands, where we see, at least from our perspective, but not speaking for Endeavour, but we see immediate expansion throughput. They're operating at 1,800 tons per day now, and we think they can get to 2,000 to 2,500 pretty quickly, as well as exploration potential. This is a very significant land package that's been really underexplored and underloved in private hands, and Endeavour coming in as the operator, I think, is going to really unlock some upside there. And just to note, I did note that was a copper stream. We are predominantly a precious metals royalty company, and that is going to be our business going forward. So to put it in perspective, our 2026 revenue split is 87% gold and 13% copper, which we think is a complementary amount to the portfolio. Being able to use some $3,000 gold plus cash flow to redeploy into a copper stream at this point in the relative cycles, we think is opportunistic. But I will caveat that gold, precious metals will continue to be our majority focus of the portfolio.
I want to talk just a little bit more about that maybe here in a moment as you guys look towards maybe jurisdictions and maybe some of those metals that you have some opinions on here in a moment. Great setup here as far as how you guys have set this up coming out of the gate with the cash flowing assets there. With that, I suppose we need to transition right into some of those key development assets. Let's cover through the development assets first, the key ones there, and then also if you have any comments on advanced exploration assets that you guys have in the portfolio, anything you want to mention on that front.
We've got some, I'll call it mid-tier development assets, which are coming on in the next 2 to 5 years, which would be highlighted by Southern Copper's El Pilar copper project in Mexico. So they are moving that forward to production now. Another West African project, Tuega, which is a gold project, which is expected to have first production in 2026. So actually before the 2 to 5 year program from that one. We also have a 1% NSR on a graphite project in Sweden. And this being a inherited asset, I wouldn't say that the graphite is going to be our focus. And I know we'll get to that question in a moment. But it is in the portfolio with a time frame towards production in the next 2 to 5 years. That's some of the shorter term. I think we've got some very interesting large scale optionality in the back end of the portfolio. We've got a 2% NSR on the Hackett River project in Canada, which is a very large mineral inventory project, predominantly silver and zinc. We also have royalties on Prairie Creek, another very large mineral inventory with significant existing resources in Canada. Other large assets in the United States, like the gold project Commerce, we have a royalty on, as well as the Mason Copper project. So these are all assets that are beyond 5 years out of being built, but they have significant ability to add cash flow to Versamet. Actually, I'm just going to go on a tangent here, if you don't mind, just talking about the royalty and streaming business in general. Historically, the royalty and streaming companies have actually outperformed the underlying miners in all commodity price scenarios. In low commodity price scenarios, it's the 90% margins that really protect the investor as well as the diversification. But in upside commodity price environments, the royalty and streaming companies have historically outperformed as well, which is a little bit counterintuitive to people because they think about that. You don't have that torque on the margin upside because you have such high margins that you're not seeing necessarily the torque increase on the margins. But what you are seeing is our underlying operator partners in rising commodity prices environments are really investing significant capital into expansions, into exploration, into new mine builds. And it's really those new mine builds that provide the torque. There's no additional capital costs, there's no operating cost, direct exposure for Versamet in terms of contributing to those builds. It is essentially, very free upside. It's essentially a long-dated option with no holding costs. And I think that's what provides some of the torque and some of the higher multiples at the end. We also see in rising cost environments is inflation set in. And I think that's one of the significant benefits of the royalty and stream is it is essentially a hedge against inflation because it is a top line revenue exposure. So I didn't mean to go on too much of a tangent there while talking about the later dated options in the portfolio, but I think having that significant mineral inventory is important for any royalty and streaming company to have on the back end.
Absolutely, it is. I think that some of those other points you brought up there are also key reasons to have exposure here, not only for the different ways you do get leverage, but then also, anti-inflationary as well. Obviously, your guys' G&A is fairly well fixed, Dan. Small office. We've obviously seen those results coming out of the bigger guys like Franco-Nevada and Royal Gold and Wheaton Precious Metals. With respect to the overall focus, I know you guys already have a good core foundation of cash flowing assets. Would it be suffice to say that while you guys are focused on cash flowing assets and adding more of those, you guys are really keeping all eyes and ears out for all phases, both cash flowing immediately, development projects, and also good optionality?
No, I think that's exactly fair to say. I'll separate it into the different types of transactions that we're looking at because we are looking at some individual asset transactions. Those I would say are absolutely focused on cash flow with a near-term, very clear path to cash flow production. Where we're seeing some of the interesting mixes is on portfolios as well. Whereas portfolios, when they have cash flowing assets, but also development assets, that's where you can get some real interesting, optionality where the majority of the purchase price is allocated towards the producing assets, but in the portfolio, you get a number of these exploration upside lottery tickets, so to speak, as well. And I think that's, we are focused on both. We've got, a great track record of acquisitions. One of our favorite transactions was obviously the B2 Gold deal, which came with a portfolio of just under 10 royalties. While Kiak and Tweg are the headlines there, I think we'll see some upside coming in with some of the smaller unheralded assets over the longer term.
Glad you guys are keeping eyes and ears out on that. It's a competitive landscape. The good thing is you guys obviously have a tremendous network and past experience, so that's gives you guys a competitive advantage. With respect to, maybe we'll mix this in, jurisdictions, maybe just say what you can here. I know again it's a competitive landscape. Say what you can as far as your guys' jurisdictional mix, what you would like to see, where would you prefer to go, given where you stand already. And then also with that, why don't we mix it up a little bit here and talk. We know your proportion, we know the focus is on precious metals predominantly, but any other metals, we know copper is important to you guys as an energy metal. Talk a little bit more about other metals that you guys would be willing to consider as part of the core strategy.
Certainly, as part of the core strategy, it's going to be very simple. It's going to always be predominantly gold, silver as well. To the extent that we look at other metals outside of that, they would be very much well-known LME metals, and that's kind of somewhat limited to copper, nickel, zinc. I don't think we're going to go too far afield on that. That is just where our institutional knowledge is. We don't like some of these esoteric pricing markets that some of the weird and wacky metals, I'll call it, have. I know they can sometimes come into vogue every now and then, whether it's critical metals or lithium or this or that, but our focus is going to be on where our institutional knowledge is best, and that is gold, silver predominantly, and as well as, other well-priced LME and well-understood base metals. So that I can tell you, we don't want to surprise investors that may not be familiar with some strange metal mix, and that's not going to be our focus. As far as jurisdiction, I think the most important part that we focus on is diversification. We have a very well diversified portfolio now. As we grow, we're going to continue to diversify it. So that's going to be, we do have assets in Canada, the US, Mexico, Peru, Burkina Faso. I think we'll continue to diversify that as we grow the portfolio and looking to have, as well, very strong operators. If you have strong operators and very strong, technically sound assets, they can often overcome jurisdiction. I think that's one of the attractive features of West African Resources as our operating partner on the Kiaka and Tuega assets. But it's always going to be a focus in terms of the technical due diligence as well. That being said, we're not going to go, there's many jurisdictions we would absolutely not go to. That allows us to focus more on where we think something is a fit in the portfolio.
Well said. I think you guys have a good sort on that. And also, of course, operatorship is very key out there. We know we have operatorship's always challenged, right? And more so challenged today, I think, than in the past. So good stuff on that. Why don't we shift into capital structure here, Dan? Cover off where we stand presently with current shares outstanding. Talk about the balance sheet, where that stands, as well as you already started to cover off some of the key equity holders, but go ahead and re-highlight that for us, including management and the board.
Certainly, we've got 467 million shares outstanding at today's share price of approximately $1.45 Canadian. That gives us a market cap of 680 million Canadian, just under 500 million US. On our shareholder registry is 33% B2 Gold, 25% Sandstorm, which will be acquired by Royal Gold, and 13% from Equinox. Insiders own 12%. I think this is always an important thing to mention, is how aligned insiders are to the general shareholder base. I think that's a very critical number for other retail and shareholders to focus on as to what the insider ownership is. In terms of our debt and cash flow situation, our debt right now is approximately US 50 million. We've got another approximately 20 million available on our credit facility. And I'll also note that our credit facility is expandable from where it is now, so it doesn't constrain us as we're looking at new assets. But when we look at the history of the company, we took on, for our transaction with Greenstone, $25 million in debt, and that was in late 2023. Between 2023 and 2025, we effectively paid that all off. With our strong cash flow profile, we are able to repay our debt. We drew down the facility again in April of this year to acquire the copper stream that we did from Endeavor, which was 35 million. We also historically had a convertible debenture in the corporate structure. We used the remaining proceeds of our strength and credit facility to repay that convert. So that no longer exists now at all in the capital structure. So it's a very clean credit facility with our supportive lenders, BMO and NBF, who've been great to work with.
Thank you for going through that. Good to see the alignment there. And obviously here going down the road, you guys have a few different options on things. And then of course, there'll be obviously equity raises in the future, and looking forward to seeing some of those deals as you guys bring those about with the transaction. Good to see the some of the strong, as we touched on before, some of these equity holders, these folks are just not in a position to need to sell their position and would most likely look forward to going through the entire life cycle of the company to acquisition, which really sucks a lot of that additional shares out of the market, which is always positive as well, as you guys continue to bring on new groups and take this forward. With that, talk about key people on the management team, board and advisors, what they bring to the table to support the company and your leadership.
Well, I'm going to touch base on one of your earlier questions with some of the parallels between Mavericks and Versamet, but key shareholders very early days at Mavericks were Pan American Silver and Newmont, and both of them had communicated to us they see this as a 5-year plan, so to speak, where the company rides up the value curve from a small TSX venture to ultimately being a highly liquid New York Stock Exchange, dividend-paying, well-researched company with a much stronger portfolio. And that's exactly what happened with Mavericks. And Mavericks, created in 2016, ultimately sold in 2022. So it was 6 years as opposed to a 5-year plan. But that is what provided the ultimate liquidity for Newmont and Pan American Silver. And looking at the parallels now, we can't speak exactly for B2, but they've communicated something very similar to the extent that they're making significant operating cash flow for their shareholders right now. Instead of holding extra cash on their balance sheet, they're able to provide shares, which provides upside exposure to their shareholders in an additional vehicle that is gold exposure as opposed to just cash on the balance sheet. B2, they did receive their shares in a private company approximately a year ago when it was valuation of 80 cents on those shares. They're up at $1.40 plus right now. So I can't speak for them, but I think they're happy with the trajectory they were on and continuing to build the underlying asset portfolio, but also starting to build the Versamet brand, so to speak, as a public company. So it's been great to have that endorsement. And I'll even note that I noted earlier that Equinox was a source for future deals, as we've done 2 deals with them. That happens through M&A as well. We did a second transaction at Mavericks with Newmont after they acquired Goldcorp and acquired the Goldcorp royalty portfolio. So we see, the relationship that we have with our major shareholders is very critical. With respect to management itself, it's a great team you've got here. I know everyone says that, but I think we are particularly confident in the team. I've worked with pretty much everyone on the team before in various roles, notably our VP project valuation, our lead engineer, Diego. He was at Mavericks with us when that got acquired. Tremendous engineer, which is, I think, most important part of the, technical side of the business, which I think is, absolutely key for all royalty and streaming companies. Paul Jones, VP Corporate Development, he actually worked with me back in the early days of investment banking. He was on that team where we advised a number of the royalty and streaming deals in the mid-2000s. So known him for a long time. We've also got Brent Bonney, who is VP Capital Markets, who joined us from Mavericks as well. And then we've got legal, accounting, and Chris Roberts in corporate development as well. So it's really a great group. And I'll say we've got a very strong board as well. Greg Smith's our chairman, formerly the CEO of Equinox. Known Greg for a long time, going back to his days of CFO of Mindfinders, which was got 15 years plus ago now. Marcel de Groot, part of the Pathway Group, and key relationship with Sandstorm. Mike McDonald is a rep from B2. We also have Liz McGregor, who's on the board of Kinross at the moment, formerly the CFO of Tahoe, and Mark Backens, who's been an executive in the mining industry for quite some time. I don't want to say exactly how long because it'll probably date him too much.
Great. Good group out there. Good team. Greg, of course, mutual friend, great guy. Also Marcel and the guys over there too. So very good group here. And you guys have, technical team's a key factor here because it really does drive that ability to select operatorship and whether or not a project's viable. And, Dan, depending on what jurisdiction we're talking about, there's so many things that can go wrong. Aside from jurisdictional issues and regulatory issues, but also the technical side. So that's good stuff there. I want to have you touch briefly just on peers and valuation. Talk about, and maybe you don't talk so much about peers, but if you want to, by all means, we love that. But valuation from where Versamet is today and where you guys would target to see this go in the near term as you guys continue to build the strategy. Any comments on peers and valuation out there?
No, certainly. Well, look at the entire royalty landscape that there is, and just to show how Versamet compares and what the long-term potential upside is. But there's 2 main metrics for the royalty companies, which is price to net asset value and price to cash flow. The larger companies are all very well understood on both metrics. The intermediates, Triple Flag and OR, trading at 5 billion plus market caps, approximately 100,000 GEOs to their account. They are trading in the 1.5 to 1.8 times price to net asset value. You see Franco and Wheaton at north of 2. Whereas you see the whole junior landscape in the 0.6 to 1 times. So we are looking at doubles to triples in terms of the valuation multiples on the price and asset value. I think one of the differentiators of Versamet compared to the smaller peers is the actual ability to use a price cash flow metric, because a number of the smaller companies have very development heavy portfolios, which leads to higher market caps than the cash flow would seem to support on price to cash flow metrics. Not criticizing their portfolios, some of them have great portfolios of development assets, but it makes it hard to do a price cash flow metric. Whereas for Versamet, we can do price cash flow metrics, and trading in the low teens compared to 20 plus out there for some of the larger companies. So, I think we're very attractively priced on both a price to net asset value basis as well as a price to cash flow basis. We've just had our second research analyst cover us now, which is Cormark, and Bentham being the first. So as we grow that research base, we'll be able to demonstrate more of a consensus NAV that some of the more seasoned companies have. But I think there's tremendous amounts of upside And I'll say this, very bluntly: the larger royalty companies have much higher multiples because they deserve to. They've got highly diversified portfolios, longer track records in the public markets, strong access to capital, liquidity, and I think that's actually the low-hanging fruit for Versamet. Is because it's a well-worn path to get there. We've got a track record of building the underlying asset portfolio. So the steps that are ahead of us, the larger companies already have. Whether it's getting that New York listing, getting a dividend in place, getting more research, getting to be highly liquid, and then the critical one that I haven't mentioned yet is the index inclusion. Being on no indices now at Versamet, we know that that is a substantial future buying that's in our future. So it is kind of a funny anecdote to say, but it's much easier to grow percentagely on a $500 million asset base than it is a $5 billion asset base. And that's simply because there are a lot more $50 to $100 million royalty and streaming transactions that are out there in the market compared to 500 million to 1 billion. So one thing that Versamet offers is that ability to provide percentage growth to investors. And that's both through the organic portfolio on assets that we already have that are in ramp-up mode or are going to be constructed, but also through M&A as well.
Yeah, that's great. There's a bit of a snowball effect here with respect to some of the indices and also analyst coverage and those types of things. Certainly, some of these folks will be almost forced to jump on the bandwagon, so to speak, as far as coverage. And then the sweet spot of the deal flow as well. I like that. So good stuff. Well, Dan, why don't we wrap it up for this introduction? One more time, you already started to talk about why, but maybe just reiterate it here as well as with current price. Certainly some gap there in valuation that can be had, and also just all the stuff that's coming down the pipe. For potential investors who are listening in, Versamet Royalties has a market capitalization of about 680 million Canadian dollars. Why should the company be considered within the institutional, family office, and retail investors portfolio at this stage?
No, that's a great question, and it echoes back as to why we made the decision to list the company in May of this year, is because we have a very much catalyst-rich environment in front of us, and that's both internally and externally. Internally, we have Blackwater hitting commercial production this year and fully ramping up. We acquired the Copa stream only in May, so that's just starting to our account. Greenstone continues to ramp up to full capacity. Kiaka just started producing in June. Tuega is expected to come on early next year. So all these in our internal assets portfolio are going to provide catalysts for growth. And then on the capital market side, it's continuing to grow the portfolio. I think I've touched on this enough, but I think the one thing for investors to take a look at is this is early days, and getting in now is, I think, a very attractive entry point for new investors looking for kind of the next tier of royalty and streaming companies that are going to fill the larger junior and intermediate ranks. We are going to see some investor capital flow into this size of the market simply with redistribution of Sandstorm shareholders that are cashing out at all-time highs. We saw Origin recently get acquired by Triple Flag, so there'll be, I think, significant capital looking for what's the next royalty and streaming company that hasn't made that run to these 1.5 to 2 times plus price to net asset values, or 20 plus price to cash flow multiples. I think that's where we are ideally positioned to be the company that emerges from that smaller set of juniors.
It is a good setup, and I appreciate you going through that. Very well said, Dan. And for further information about Versamet, how can folks contact the company?
On our website, versamet.com, should have contact details, and you can reach out directly to the company, and we're always happy to engage in a dialogue with our shareholders.
Well, Dan, it was good to have you back on the program, and this time to introduce Versamet Royalties. We're looking forward very much to seeing progress and having you back again soon for more updates.
Great. Really appreciate you having on, and thank you to everyone listening in today.